So, this one, deduction for half of self-employment tax. So recall, I'll do a little recap here for those of you who it's been a while. So self-employment tax is Social Security and Medicare tax that's paid by self-employed individuals. So remember, Medicare for an employee, Medicare. So for an employee, EE stands for employee, ER, employer. You're getting a little preview, Kathy, for next chapter. So the employee pays 6.2% of their income that is subject to Social Security tax, Medicare tax 1.45%. But then the employer also pays 6.2% and 1.45% of those taxes. A lot of employees don't realize that the employer is paying for half of that tax. So in total, 7.65%. 7.65%. This is 15.3 total, 2.9, and 12.4. So the employee, if they're making $1,000, if that's their taxable wages, that means that they're paying $76.50 in Social Security and Medicare tax, and the employer is also paying $76.50 for a total of $153 in Social Security and Medicare tax. This is for an employee-employer relationship. When you are self-employed, however, there is no employer. You are both employee and employer, which means you get to pay full amount, which is pretty hefty sum. 15.3% is a pretty high tax rate, especially when individuals aren't really expecting it. And I had a lot of clients who they would come in and they would open up a business or start some side hustle or something, and they always do it before. They always come to you after they've done it. Like, they're not going to come to you before to find out what's going to happen. They come after, and then they're disappointed. But they're surprised to learn that they had this huge tax that they weren't expecting to have to pay. They're just thinking about income taxes. Well, no, self-employed individuals have to also pay Social Security and Medicare taxes. So what happens is, on the tax return, this tax is calculated for self-employment income. But then there's also a deduction that is allowed for half of it. So once you do the calculation, if you're self-employed, let's just say take this out. Work for ourselves, we're having to pay, so we made $1,000. Now our tax as a self-employed individual is $153. We take 1/2 of this. So what is that? 76.50. We get as a deduction. Or I shouldn't call it a deduction. It is a deduction, but it's an adjustment. So we have to calculate that out. This is based on our net income. The calculation of our tax is based on our net income from self-employment, not gross. So we get to deduct all of our expenses and everything first. And then what's left is what we're going to use to calculate our self-employment tax. So there's a couple of steps to figuring out the 1/2 of self-employment deduction. First off, you've got to figure out how much is the self-employment tax, right? And then you just calculate 50% of that, and that is your self-employed health insurance deduction. The reason behind that is because if you were an employer and were paying that, you would get a deduction for half of it. Like, half of what you paid, you would get to deduct. So this takes that into account. In addition, so they do talk here about, so in addition, as a reminder for most of you, we also have this additional Medicare tax. Remember that? It was 0.9%, but it was only on higher income individuals. If you're an employer, you start withholding it once the income wages reach 200,000. If you're self-employed, you are able to base it on your filing. It's still based on filing status. It's just that as an employer, you don't know what your employee's filing status is. So you're gonna assume they're filing as single. So that's just the assumption that employers have to make. But when you're self-employed, you still have to pay this tax if you make over that $200,000. But you get, you don't have to apply the tax. Like if you're married filing jointly, you can apply it at 250 rather than at 200. Those people who are employees and it starts withholding at 200, if they've overpaid, they'll get a refund with their tax return. Okay. I don't know why this net investment income tax, we don't really have to worry too much about that. This is an additional tax that for individuals, higher income individuals who have investment income, if their investment income reaches a certain threshold, then they will have an additional 3.8% tax on top of it. It's a Medicare tax. It's to help pay for the Affordable Care Act. That amount is, because usually investment income isn't subject to any of these, because it's supposed to be for, this is for employment, and investment is for, this is active income, investment income is passive income. So, let's see. What do I want to say? What is this? Are these questions or just statements? No idea. I guess they're just statements. So anyway, 1/2 of the self-employment tax. We'll get more into that when we do, like I said, chapter 6, because that's when we do self-employment income. So you'll do some, and you'll be working. There's a separate form for calculating that. Separate schedule. Schedule SE is where, it's where the self-employment tax is calculated. And then you'll see when you look at it, when we get to that point, there's a box there for 1/2 of self-employment tax. So that's where it's calculated, then it goes over to Schedule 1 to become an adjustment. Questions about 1/2 of self-employment tax? No? All right. So